Hey guys, Mike here. So I got a loaded video for you, and there's a lot included in this, and I'm just going to list out what is included, and you can decide if you want to watch or not. But one, you're going to see two different interviews in this video. One from Tom Lee from this morning, who made what might turn out to be a crazy prediction for the end of June, the month we're in right now, right? Then we're going to have one from Jim Cameron talking about the flows, because remember, him and Tom Lee approach it in two different ways, right? And so he's all about the flows and what you can expect in June. But also, you get to see two guys who are professionals at this, who have made some really good predictions, but they have a totally different outlook on inflation. Okay, totally different. The other thing is you're going to get to see, one, where the billions went to last week with the inflows, and it was just in one spot. That was all it was in. So they were definitely selling a lot of other stuff and putting the money somewhere. Most hedge funds don't really just hold cash, right? They're going to put it somewhere. And the other thing is, we're going to go into what you're seeing with, as far as you hear people say, the hedge funds, big money is selling at rapid pace and all that stuff. But there's one sector in particular that they've been selling off for sure and piling the money into this other sector. And so I'll show you what I'm talking about. So when you hear that and everything, you can see it. But the other thing is, I'm not calling it a trend yet. It's too early. But IWM is following the 10-year yield. You saw it again today. We'll go over the data that came out, the data that drove the 10-year down, and IWM went right with it again. Now, you asked me, some of you saw when I put in yesterday's video, eventually they're going to sync up, and they're just going to go in the same direction. When that happens, it's usually bad news, okay, for the stock market. But I'll show you what I'm talking about when I say they're going to sync up. Now, what was the news that came out? And it was the JOLTS jobs, of course, but you can see the JOLTS job openings, right? The job openings continue to decrease, actually coming down almost near what was 2018, 2019 level. Before that, you can see way down here, these levels, I don't think we'll ever get back down there. It took basically 2020 to get us down to those levels. So we're getting close, all right, to being at those levels, as you can see right here. And when you look at even the bottom, the U.S. job openings versus U.S. unemployed workers, things of that nature, that's coming back down into where we were 2018, 2019 level. So really kind of normalizing right there. But the fact it's coming down means what? You may not call it great for the economy, but that's what the 10-year wants to see, right? So they end up dropping the 10-year down again, 2%. If you count pre-market. But when you pull up IWM, you can clearly see, and I kind of sync these together, they just went in tandem. And what's crazy, when it dropped, and then IWM went up when the 10-year went up. And the 10-year started to roll back over, and then IWM went with it, okay? And you're sitting there going, what do you mean these are going to sync up eventually, and this is the way it's going to be? If you look, before any kind of recession, you'll see it. You'll sit there, 2020 is not much to see because obviously it was a 30-day drop in the bucket, but it was trading sideways, right? But go back to 08 and them. What do you see right here? They're completely in sync. 10 years going up, IWM's going up, 10-year rolls over, IWM rolls over and goes right with it. All right, you go back to the .com, you'll see the exact same thing. They'll be synced up, and that usually leads us right down into a recession. So again, it's not a trend. You just got to pay attention to it and be aware of it, okay? That's why, if you might notice, I'm putting videos out trying to prepare to say, look, if the business cycle, I know it was broken, but if it's coming to an end of a business cycle, which we come in these cycles, right? If that's what's happening, you need to be prepared and know what to watch out for, so you're not sitting there going, why are my stocks down 50%? What just happened? You know what I'm saying? So again, that's exaggerating, but that's what I'm trying to do here, just show you certain things. Now, we're going to talk about Tom Lee first, who comes out with an exact number and an exact date, which is in June here, for his prediction first, and then he'll also talk about Bitcoin. He gives a crazy prediction of Bitcoin. I want to know if you guys agree with this. I hope he's right. Trust me, I hope he's right. But I don't agree with it. But we'll see on that one. And then I'll come back and we'll go into Jim Cameron.
So 5,500 on the S&P by the end of June. It's hard not to talk about that immediately. Based on, Tom, lower inflation.
That's right. I think there's a fundamental case, Joe, which is inflation is coming in softer than expected, and I think the job market is it's cooling but not weakening dramatically, and I think that's a good situation for equities. And I think that the sell-off in April actually hasn't really been fully recovered, and that's why we expected a rebound in May, but I think that carries over into June, and there's still $6 trillion in cash on the sidelines, and margin debt's still way below where it was in October 2021. So we know investors really aren't that long yet. So I think that comes together this month with a pretty surprisingly robust move higher.
And this is another like crazy call, Tom. 150,000 on Bitcoin by the end of the year. It's already June.
Yes, we're still constructive on Bitcoin. There's the tailwinds that are associated with the halving that just took place. We also know because of the Bitcoin ETF, and there have been tremendous inflows, but institutional sort of adoption and infrastructure being built around Bitcoin is only beginning. And that makes, crypto, especially Bitcoin, a bona fide asset class. And I think that sort of widening ownership is going to be propelling Bitcoin to 150,000. And again, maybe surprising or not surprising, Bitcoin still follows math. More than 87% of the move in Bitcoin still follows just the number of wallets and the activity per wallet, and both are moving higher.
And so let me know if you agree with his S&P prediction or, the Bitcoin prediction. The Bitcoin prediction was probably a little more to the extreme, right? But again, I don't consider myself to be a crypto expert. Maybe I'm missing something, but that's what he thinks. Now, here's Jim Cameron talking about month end, which I'm actually doing research on this right now for a members video, looking at all the previous month ends and how they react and everything. And then the flows, and he actually does give some answers, because you guys are always asking, what is he talking about with Vaughn and Charm and all that stuff? And he actually does, he's asked, and he gives a definition on it. But let's do his answer on inflation.
This is a pretty easy read here, okay? Here's our income data. Here's the 4 metrics for inflation embedded into the number. If you just look at the top, this is last month, this is this month. What conclusions can you draw?
Stagnation, inflation, stagflation, right? I mean, this is what we've been talking about on and on throughout. People have called it a soft landing. It's not a soft landing. You're still getting a hot inflation number with a slowing economy.
Yeah, I mean, there's very little doubt. These numbers are smaller. And the consumption went negative, and it's been negative over the last 4 months. And if you look at yesterday's GDP, what did that tell us on consumption?
Yeah, same thing.
Same thing.
Things are coming down.
And when everything has the consumer's ability to keep consuming is so integral, these are big changes. And once again, just so people understand, viewers, listeners, okay, these are the metrics for inflation. Only the month-over-month core was lower. And if you really look it up, this number was like 0.248, okay? If you look at the websites, they put it out at 0.25. So they round it. But we're only, 3/10 away from making that equal to last month. My point isn't to belittle the numbers. My point is to pay attention to them.
That's absolutely right. I mean, there's structural inflationary forces, and we can start to cyclically slow them down. But at the end of the day, that inflation is going to continue to be pretty high. I think that's the biggest point people have to be aware.
What goes on at the end of the month when you're an options trader?
Well, look, at the end of the day, this is an end of month and beginning of month coming. When the month is up, 6% for the month, decent run. At the end of the month, there is a reinvestment, a re-leveraging effect that happens in portfolios. So we've been getting this softness as we've broken down technically a bit, but what do you get? A big pushback, coming into the end of the month. On top of that, 3 holidays coming up, 2 more holidays coming up. It's really slow, low liquidity, and in that context, you're getting a lot of Vana and Charm flows with a big quarterly expiration come as well. So
real quickly, okay, Vana and Charm, just real quickly, tell our viewers what that means.
Yeah, what that means is you have the whole world in the options world is long put, short call to hedge long exposure. The dealers are short those puts and short stock. So every day that goes by, when vol comes down, that means there's a buyback of deltas every day, a buyback underneath the market. And big expirations, big exposure like a June OPEX mean even more of those flows. So these are the market forces, the structures at work underneath the market that push things higher, even in the context of what might be weak news, right?
Tail wagging the dog?
That's exactly right. Nowadays, it's flows, first and foremost.
And so hopefully that makes sense. And he's right. It really is about the flows. We've seen it in multiple stocks. Look at NVIDIA, right? I mean, this thing is, if anybody looked at 2 years ago, oh my goodness, look at this thing. The flows, the options market, everything, it really means something. It's not the creme de la creme of everything, but it absolutely means something, right? And so it is part of the equation that goes into how the market moves, okay, whether it's up or down. That's just the way it is. Like when we go into negative gamma versus positive gamma, it's amazing how the market will flow. And so just things to be aware of, pay attention to and stuff. But look at what happened last week with these flows. These are weekly fund flows. And you can see, I'll show you to you whenever I get it. Look at this. There was only one game in town last week. It was in large caps. Like they sold almost everything else. and they just flowed into large caps. Why? Because large caps, especially the big mag 6, 7, 8, whatever it is, they're the only ones that make money even off these high interest rates because they have such cash positions, but they're also just safe havens. They're so heavily held in these different portfolios and stuff and ETFs and everything. Now, the area that's been getting sold off and getting rotated into, one is the software stocks, right? I saw this right here and I thought, this is interesting. You can see about mid-July last year, somewhere they started selling them down and rotating into semiconductors and anything to do with semiconductor stocks, the equipment and everything else. I thought, let's see if it's true, right? Let's see if it's true. So let me just pull up a software ETF, and here's iShares, right? And so I pull them up, and you look at their top 15 holdings right here, and I thought, okay, well, let's just pull them up on the chart, and I'm going to pull all 15 up, but quite a few of them here, and we'll see. And you can see, I mean, they were doing great coming up. Actually, they didn't sell them off. It says on that chart mid last year, but they were still going up nicely. I'm sure a lot weren't. But then, you know, when you come into like the last 3 months, you go, oh yeah. And we've seen software companies get absolutely obliterated, especially on earnings, right? So you can see all of them coming down right there, while semiconductors have been doing pretty much the opposite. And especially right there in that area where a lot of them start reporting earnings, you see some big drops happening. And so will they continue to rotate out of these? That's what we got to find out, right? I think CrowdStrike, I think they reported today and did pretty well, but we'll see if they hold on to the gains. Now, real quickly, IWM, you can see right here, still a hot mess. And guess what? It has to hold this level right here because if it breaks around 201.50, whatever it is, it's going down to 200 because look at that gap. It'll fill a gap, right? I mean, this thing is a gap fest. Look at all the gaps, right? But it'll fill a gap. It'll have a very solid support level right there, which it absolutely have to hold. If it breaks 200, oh boy, I mean, you better watch out. Right, so again, if it starts to move back up, a lot of resistance above, so just pay attention to this one and just compare it, see what's going on with the 10-year yield, see what's going on with IWM. It needs to start moving up if the 10-year yields are dropping. Now, when you look at SPX here, the S&P 500, pretty plain to see. I mean, that's where we ended yesterday, right there. We come back up. So we're kind of just in this sideways motion at this point in time now that we've cleared back above previous all-time high. But when you pull up, you know, and look and see, okay, what's really happening here? Again, watch 5240 for a put wall if we do get down there. So that was Friday's area right there. You can clearly see there is a high, right? Here's your low. Here's a lower high. And this is a lower low, right? So now it's trying to see if it can push back up after retesting 5200. There's still what is a lower high, right? So it's lower than the one to the left, okay? And so we got to get to see if this thing is going to roll over to set a higher and lower or not, which is usually what you're going to put in first. That's what we got to find out. And so again, it's in this little short-term channel. If you'll go to an hourly, you can see it trying to move up, but you have to get above that level right there, which is around 53.16, okay, before you start heading back up. And so that's what you need to see on the S&P. Again, watch 5240 for a put wall again to see if that happens again. And then when you look over here at NVIDIA, all-time high once again today, continues to push up. It was the most positive as far as flows were concerned. A lot of call sweeps coming in on this one. We're not surprised. Again, you can see clearly this is what? This is an uptrending channel, okay? And you can see that plain as day. So as long as it stays in that channel, keeps going up, still got, what, 6 days till we get the stock split and everything. Then if it gets added to the Dow, again, you'll have profit taken most likely when it splits. And remember what I showed you from that members video, it's all about what's happening in the market, okay? That's key. Now, Dale, somebody asked me about this, so I'll tell you. One, big drop obviously on earnings. It's bouncing on the 50 moving average right now. Also coming into what? Some confluence here, which was resistance. Now it's trying to turn into support. So it's a good bounce area to see. So it's a big point of interest. You got your 50. You got a point of interest right there for it to bounce. We'll see if that happens after, what is it, a 28% drop right there. And some levels to watch if it does move up. 140, 145, get above 145. This thing's going to rocket probably up to fill the gap to the left. Not the huge gap, but the gap to the left right there. So the gap below that. But, you know, when you're in that gap, usually you'll see about a 50% retracement into the gap before you start getting pulled back. So again, 140, then 145, then 50% of the gap most likely. Just pay attention to it. Now, Palantir is the last one here. Again, some confluence in the way, but it comes down that area where you've got many bounces, okay? And it's held this bounce so far as it moved up again today. Even when the market was red, Palantir was actually green. There's a lot of stocks like that, by the way. And so, but this one's going to have, it's got heavy resistance as that right now. If it does move up, 23.17 is where a lot of people were shorting last time. So that will be heavy resistance. So it's got its work cut out. That is for sure. There's no ifs, ands, or buts about that one. So be careful here. And when you come to earnings, we do have a lot of retailers coming out with Dollar Tree, Ollie's, which a lot of people like, Lululemon. This one's set up for a bounce or set up for a major drop. Okay, it seems like more of a bounce, but we'll see. Then when you talk about data, 8:15, you'll have ADP, non-farm employment changes, final services PMI, ISM services PMI. Remember, services are 70% of the economy. And crude oil inventory, which I don't want to pay attention to, but we had a big drop in oil this morning, so we'll see if that affects oil at all. Pay attention to the 10-year yield, dollar as well, which has been showing weakness, and see if the IWM starts to act normal again and participate or continues to go down with a 10-year, because a lot of Cathie Woods type stocks, high beta stuff, was actually up today, right? Just IWM did not participate. So we'll see what happens again tomorrow. It's probably going to be some big swings, some boring times of not moving at all, which was today for a long period of time. And welcome to summer. Gotta love it. So please hit that like and subscribe button on your way out. Feel free to hit the link down in the description and sign up for the membership, Less Than McDonald's combo. If you like a daily news briefing, like to be in the Discord and a lot of good people and stuff, and all that good stuff. So anyway, I'll see you guys tomorrow.